All right, guys, shall we start? Also, Jangan, each of these topics are like technically one episode each. So I think in the future we should probably just be a bit more focused on. It's very hard to go deep. I spent the whole day researching all these, and it's like still very shallow. I think so. Hello, Jangan.
Yes, hi, I'm here.
Jangan, can you hear us?
Yeah, I heard you and chose to ignore you, but yeah.
Hello, barbarians, and welcome to the 12th episode of the LLB podcast, Low Level Barbarians from Asia on Asia with debate and discussion on trending topics. With us, myself, Alex, typically your host of EOA. Man of the high ground, Dave Chang. How are you, Dave?
I can't believe we made it to 12. Like, I'm actually kind of surprised. I thought we like maxed out at like 6, 5 or 6, and then we'd all be like,
Whoa. Well, like you said, as long as we're having fun, but we were a little bit angry today, but we'll get there.
yeah, we'll get there.
And Jangan, the information super connector. How are you connecting, Jangan?
I'm good. We bought too much furniture today, and people are sending me furniture. There's lots of noise, but it's good to get people to do some actual work. Yeah,
So physical labor is actual work. The other
physical
work, not
labor,
real work.
and we have an intern from Sweden who used to work for the Klarna, and his main contribution today is teaching us how to pronounce the proper names of all this IKEA furniture that we bought.
Oh,
Nice.
can you
Hiring for
send me
value,
like
I
a
see.
recording of that? Because I've always wondered.
What?
It's called Flug.
Yes. We basically learned how to pronounce it, and all the names, and the only thing we can remember is Billy.
Yeah, Billy's easy. I got that one.
Yeah,
Yeah,
I got that one too,
bookshelf.
Billy.
Yeah.
All right, guys. I guess we'll kick off the first topic. Which I guess we'll continue our discussion from last week on maybe in a different narrative on Ukraine and the Russia crisis, right? So Shotgun wanted to talk about the ramifications. I would like to start the point where I was reading a Financial Times article called "The End of an Era: IKEA, Russia's Middle Class, and the New Cold War," and that article was quite interesting in respect that they basically said what we were discussing last week, where Western sanctions, the losers are going to end up being the Russian people, which is quite clear at this point. Everything unfolded as we discussed. Sanctions ramped up, economic hit hard, the ruble's down, and now, in a sense, Russia's getting canceled. Every single Western brand is pulling out of Russia that we know of, from Adidas, McDonald's, IKEA, right? But what this article was positing is that possibly this either will stir people to nationalistic pride, and people will step up and fill in this void, and Russia diverges, or the other side is what we talked about. Russian people get hit hard, and people maybe want to stand up against to what they don't agree with the actions in Ukraine, and will try to quote unquote fight the machine, which I don't know how that would happen, but this article discusses that these are two potential different paths. So I don't know, what do you guys think are the potential ramifications economically, socially, otherwise, for Ukraine? Jangan, I don't know. What do you think?
For Ukraine, it's bad. I mean, the country's wrecked. So, uh, I I spent some time in Ukraine back in 2015. So, in terms of infrastructure, the country was already quite backward. It was 2015. I basically drove from the Moldovan border to Odessa, and on the road, I remember you had lots of signs saying that, hey, finally have 3G. That was 2015.
Mm.
So it
Wow.
was, and the funny thing is that I mean, I did that trip before I was in I think 3 former Soviet republics, and only in Ukraine you see lots of Lada cars. Like the old Russian cars, you basically barely fit into one person, let alone 2, and usually they fit 4. So so I think that I think the country became what it was before the war for a reason, but this war is definitely sending it backwards, and which is quite sad. And I think if this sort of geopolitical game between America and Russia continues to play on, I don't see any way out for Ukraine to be peaceful and prosperous. Because remember that they had that security guarantee in 1994. That's how Ukraine gave up its nuclear weapons.
Yeah. That's from the Ukrainian perspective. Then what do you think about how does Russia end up out of this? What are the two potential, or what outcome do you think is more likely? People rising up against the Russian government, or is it more likely that does Russia have the potential for local brands? Ever since the end of the Cold War and this liberalization and all these Western brands coming in, Russian brands also have come up domestically. Do you think they could come in and fill this kind of void that's missing? Or do we end up with people just demanding that they want their old way life back? Or I don't know, what do you think?
Dev, you have anything on that point?
No, I mean, I was just thinking, like, I guess before we get to that point is like the first part about like what's most likely to happen in Ukraine, and I mean, it's always hard, I guess, to like make any sort of like projections when it comes to these sorts of environments because anything could potentially happen, and you never know. But I mean, if you look at history, if you use history as a guide for this, right, and you compare this to like maybe let's say like the Chechenian conflict back in the late 90s, early aughts. So the Chechenian, I think I'm looking at it now, like the actual combat phase lasted from basically like 9 months and 5 days from like 1999 of August into like May of 2000, right? But then what followed after that was basically like you had 9 years of like this really brutal grinding insurgency. So I mean, I think that's most likely like kind of maybe their best case scenario at this point for like what happens. Maybe like there will be, hopefully an official end to like the armed conflict or like the major conflict stage of this war, and then they'll most likely settle in, if we look at history as a guide, into sort of like probably the situation that the US had in Iraq, where we were there for like 10, 15 years fighting like a local insurgency, and it's very bleak, I think, for everyone involved. I did hear there's like an interesting and I wish we had someone that was a bit more informed on the topic, but I did hear that Russia recently actually changed their demands for the Ukrainian government. So a couple weeks ago, I think like 2 weeks ago, like a year ago, they had like proposed, they had sent over like their terms of surrender essentially, right? And to the Ukrainian government. And so one of them was obviously referendum on not joining any like EU blocks, so like no NATO, no EU. Another one was what was it? I believe it was they have to recognize certain regions like Crimea and the Donbass. And then the third term was the complete demilitarization of Ukraine, which I think at the time was obviously a non-starter for Ukraine. But recent report, I read one this morning that said that they had changed that to say no offensive weapons as opposed to complete demilitarization. So it seems like the Russians are also potentially starting to look for, and if you believe reports, right, are also starting looking for some sort of off ramp to this conflict. I don't think they were quite ready for how long and how grinding it is, and also for the economic sanctions that they're currently going through. But I mean, either way, however this pans out, I think it's going to be bad for everyone.
I've
Yeah.
I have a feeling that that Putin can't afford for the war to drag on for a long time, and especially with the intensity that it is today, because face it, I mean, I think he uses the career soldiers, right? I mean, this is the most important force in Russia that is loyal to him, and that's basically his foundational power, and he can crack down things. And if these soldiers, which are loyal to him, get sort of ground or whatever unnecessarily in Ukraine, and he will be facing lots of domestic challenges. And I mean, if you look at historically in Russia or in other countries, whenever you invest too many soldiers that are loyal to you outside, I mean, even with Napoleon, right? And they failed to control what's happening in your country, then your enemies will seize the opportunity. The revolutionaries will seize the opportunity. So one thing I think maybe not politically correct to say that is that I don't trust the people. I think people can be mobilized, people can be manipulated, but I don't think that that people can organize themselves to become a proper political force. So there's always someone who, in whichever capacity, leads people into some political movement. And I do think that Putin has enemies in Russia. And if he consumes
Mm.
a lot of his resources in Ukraine, and I think his rule in Russia would probably be dangerous. So that's my take.
Well, I mean, look, I want to
Mm.
talk about, because did you see the report that Putin had
Yeah.
asked China for military, like he had officially asked for military support? Like, I
Yeah.
want to, I want to talk about that. Like, what do you guys think about that? Because that to me
I,
seems like, I mean, there's two ways to look at it, right? One is like he actually needs the help, and two is like it's a political maneuver to force the CCP to
Yeah.
choose a
China.
side, right? I'm just curious, like, what you guys think about this?
Well, it's the same thing with US, Ukraine asking the West or US for help. It's the same positioning, right? Like, I don't think any side could really afford to step in unless you really go for World War III, right? So it's just I think both sides are using the same tactics. Like who does Putin could turn to? Other I mean, there's very few people, right? Other than maybe I don't know North Korea or something, but like it's the same thing I think, and I think both sides just can't really afford it. So
I think
unless everyone's really ready to stand by it, and actually fight each other over this.
I I don't think China has the military power to support Russia. I mean, lots of the equipment in China is still Russian made. So
Yeah.
I don't think they're at that stage that they can actually give Russia lots of aid of sort of advanced military equipment. But if I look at how this war has progressed, one thing which is obvious is that the Russian army clearly doesn't have money. I mean, just look at how many
Mm.
missiles that they're firing every day. It's. I mean, compared to what the US would have done in other countries, it's just peanuts, right? I mean, first they had 156 missiles or something. They used that in the
Mm.
army already, so which means that I mean, if you really want to end this war swiftly, and you would bombard your enemy's air bases, whatever out of shape, and before you send your ground forces. That's what US has been doing since the Gulf War. But
Yeah,
but Russia
that's true.
didn't do that, and I think the key reason is that they don't have enough money.
Mm.
Mm. So yeah, so so I, I've been looking at what the Chinese government has been doing in the last few weeks. Initially, this refused to call it a war. I think they echoed the Russian term of like military operation, and they're basically reiterating some principles of respecting sovereignty, territorial integrity, and sort of respect Russia's legitimate security concerns, etc., etc. So basically, if you look at every person foreign minister of foreign affairs in Beijing, they're all saying the same thing. And gradually you see a change of tone, right? I mean, now they're starting to call it a war. But I think strategically, they, they I don't think they will choose sides openly, but strategically they will probably want Russia to be at the forefront of this geopolitical tussle, and
Yeah.
for the same reason that the US would want Ukraine to be consuming Russia's resources. Mm.
Dave, what was your take on it? Do you think, or your initial reaction?
I think, yeah, I mean, I think it's, I think they've really put China in a hard spot. So I read somewhere that essentially they had given China the heads up that they were going to do this, right? And then China had like I did the impression that I got from the article, I wish I could think of the name right now, was that China was like kind of a little bit surprised, and they didn't think that they were actually going to go through with this invasion. I mean, because if you think about it, for the CCP, it's kind of like a lose lose, right? So like on one hand, Russia and the CCP share like a huge land border, and they're like one of the only powerful nations that I think CCP has like a decent relationship with at this point. So they can't really afford to
Yeah.
alienate the Putin regime. But on the other hand, right, I think the Western reaction to this has been so overwhelmingly negative, and it's actually, in many ways kind of gotten the Europeans to kind of get their act together. They've sort of been
Mm.
lazed for the last 30 years, and then they're all of a sudden they're like, oh, maybe we should actually like, start
Hmm.
spending some money on our defense budgets and start caring about like
Yeah.
energy independence. And so I think it's kind of galvanize it. So I think they also can't come out as like really explicitly pro-Russian, because then they kind of get dragged down into the same, I don't want to say pariah state, but sort of like the same geopolitical positioning as the Russians, and they're, quite frankly, their global reputation is already terrible, right? I've like read recently that global approval of like the Chinese is like at an all-time low, like basically across the board, like their disapproval ratings are like in the 70 to 80%. A lot of that's COVID related, but I don't, I think if they're trying to establish themselves as sort of like a new pole in the global hegemon, you can't really afford at this point to be so deeply unpopular among so many countries. And if we're being honest, right, like I think the one thing that we've seen is like the global financial system is still very much underpinned by the US system, right? I mean, just look at how brutal the sanctions have been and the impacts having on Russia. And the Chinese, I don't think, are necessarily ready to, they don't have the infrastructure set up to like sort of like combat this yet. So I think the Russians have put them in a hard spot.
But I
That's a
think
good point.
I think one thing I would so I've seen lots of news reports. I mean, the thing about war situation is that that lots of things happening and there's lots of news. Many of them are fake, coming from both sides or multiple sides. So it's always very hard to get an accurate reading about what's going on. I mean, Alex, you asked about what's happening in Russia. What do people think? The truth is we don't know. And even the information you get from people interviewing people on the ground, it might be information on warfare. I mean, practiced by the
Yeah,
one side or the other
that's true.
sides. So we don't know. But I think one thing I mean, because I've worked with parts of the government in China before on sort of specific projects on technology, but from my understanding about them is that anything that's major that reaches the Politburo level, so they would have had all the scenarios sort of laid out before decision making. So I wouldn't say that they would be surprised by what's going on. But nonetheless, if this war drags on, I mean, they know that sort of this might happen. Doesn't necessarily mean that that they have the resources and they have all the confidence to deal with it. It's just they probably have a plan for it, but it's probably very difficult. I mean, did you guys read? So basically, the I think the foreign minister or the state councilor from China was having a meeting with who was he having a meeting with Sullivan, the national security advisor, yesterday in Rome. And I haven't read the American account, but the Chinese account said that they had a very intensive 7-hour discussion. So my take is that they basically quarreled for 7 hours.
Yeah. I saw some headlines from
Yeah.
threads about that talk.
Yeah.
From the Chinese perspective, they
Yeah.
used headlines were using words like disrespect and talks only happen when you get respected. So I mean that's just one narrative from the Chinese perspective of the supporters of China. Right? So the other side, of course, will say like, oh, the Chinese are argumentative or whatever. But yeah, it just I think the fact is it just wasn't productive, which is clear. So
I think the fact is that all these guys who are at the talks, who are leading the talks, are master players in geopolitics, and everything they do for the public is for the show.
yeah, for
And
sure.
people.
I mean, everyone knows
yeah,
what they want. Yeah.
yeah, exactly.
Yeah.
But interestingly, we have I have been speaking with people in China doing cross-border e-commerce, and there's some interesting implications of the war. So first, you know a company called AliExpress, which is owned by Alibaba.
Mm-hmm.
Do you know that their biggest market is Russia?
Right now, like currently or previously?
It has always been the case. I'm not sure about right now, but certainly things will be impacted a lot because lots of sellers refused to send goods into Russia.
Really?
Yeah, because
Do you know?
they don't know whether they can get the money back. Russians
they
are
can't get paid
Russians
for
are
it.
telling them
okay.
that
Okay, it's economic. Okay.
Russians are telling them that they will be paying ruble, and I don't think the
Yeah.
Chinese sellers are willing to accept the ruble.
Yeah. There's no
Yeah.
that happened exactly. There's no foreign currency left in Russia almost. Like there was like when the war force broke out, like a week into it, the Russians basically the government made all companies basically liquidate their foreign currency reserves for rubles. Right?
Yeah.
Which is kind of crazy.
Yeah,
You
yeah,
think
yeah.
about it, it's like they took like they were like, no, like give us all your euros. I want to give you rubles back. Right? It's very
Yeah. So that's one implication. So I'm not sure how much that will impact Alibaba's numbers because I mean in their financial reporting they bundle AliExpress together with Lazada and other businesses called it sort of international e-commerce or something. So,
Yeah,
but certainly I think in this quarter things will be impacted. The other thing is something that I didn't expect. What I was told is that Shopee's business in Poland is also impacted.
Shopee's what?
Shopee's
Business in Poland.
in Poland, especially the cross-border part, because the Polish currency has devalued quite a bit.
Yeah.
I don't know how to pronounce it, zloty or whatever. It has devalued quite a bit, and again, so whichever the sellers in China were selling, which were quite price competitive, is not that price competitive anymore. So there's some impact there as well. And Alex, you would know Zarora Global Fashion Group, biggest businesses in Russia, Lamoda, and
The La Moda, yeah, it was very big.
so it's interesting. I read their Q3 and Q4 earnings, and basically, I think what they call CIS, right, Commonwealth of Independent States, would occupy like 30 to 35% of their total business, and they operate in 4 countries: Russia, Ukraine, Belarus, and Kazakhstan. And and
well, you know how that's going to end up for the next quarter for Ben.
and they had one full page in the latest earnings presentation, talking about the CIS situation. Which I think, I mean, they didn't really mention about numbers, but and or outlook, because it's incredibly difficult to give guidance on this current circumstances. But one thing they did, which I thought was probably right, is that they said our priority is to ensure that the employees which are operating in those markets, especially Ukraine, are safe. I think any business would be facing incredibly difficult decisions if they're operating in those countries.
I mean, the question is how will the Russian economy continue to function? I mean, are they big enough internally to support? I mean, if even if China's not at the point, they're not ready to transition to be self-sufficient, to get away from globalization. Like Russia's probably even worse off. You'd think. So it feels like this is like not good, no matter what.
I mean,
I don't see how like any void could be filled. It's just like kind of like post World War II. Japanese economy and all these other economies starting from scratch. It seems like this is gonna, if this drags on, it's gonna go to zero.
no, I mean it's really bad. Like Russia is a petro state, right? Like they're like I think like
Yeah.
40% of their GDP is linked to like oil and gas, essentially, or energy,
Yeah.
right? And then like the latest the round of sanctions coming out of the US and out of the West is they're going to start sanctioning Russian energy.
Which is kind of wild. Like that.
Yeah,
Like
it's
'cause
crazy.
the one narrative you don't hear about is like how much that's going to affect Western economies, because we need that oil. Right? Like,
We need that oil.
Most
I mean,
countries are importers of oil.
it's also like, so I was saying like last week, I think like the US still imports like 8%. So the US won't be as bad. The US imports like 8% of its natural gas, liquefied natural gas from Russia. The country that's really going to get hammered is Germany. I think like Russia accounts for like 30% of Germany's blended energy mix between like natural gas, petroleum, and all that stuff. It's huge implications for Germany, right? Especially because they also shut down all the nuclear power plants. I also, you know what is really interesting? I read that like a lot of these like environmental groups in Germany that were advocating for the abolition of nuclear power were actually funded by Russians.
Oh my God, that makes a lot of sense. Yeah.
Right?
I believe that conspiracy.
No, it's not. It's just anyway. So I think with the US,
so by the same logic, all those environmental groups in Taiwan are advocating for abolition nuclear energy is probably funded by China as well.
Probably,
probably,
probably depends, right?
Follow the money.
I mean, I think there's going to be like, so there's a couple things here, right? I think from like a macroeconomic point of view, this is obviously going to have, it's going to, I mean,
inflationary.
Well, inflation is getting even worse now. Like the latest numbers out of the US, it's like 9%, which is like crazy. That's a crazy inflation.
Even in Malaysia, it's ticking up by a few percentage already.
Yeah, even in Malaysia,
Southeast Asia started to feel it too.
Yeah, but if you think about like 9% inflation in the US is like insane, especially because we're coming out of a period where it was basically zero for like 20 years, right?
Yeah.
So even if it doesn't have, so there's two ways to think about it, right? I think there's one, there's like obviously the day-to-day life of like American people, right? And there's like a really interesting stat that came out. Did you know that like basically 60% of the American population lives paycheck to paycheck?
Yeah, I've heard that before.
Yeah, right. So if you think,
it's almost quite shocking.
It's quite shocking, right? And for these people, energy and gas are like a huge component of their expenses. It could be like 20-30% of their expenses, right? And so if you like increase energy costs by like another 15 to 20% on top of where it already is, which is already expensive, then we get into a situation where a lot of households are going to have to start making some really difficult decisions. It's going to be like, oh, do I drive or do I buy more food type of situation,
Yeah.
right? And that's going
Yeah.
to have like some serious implications, both for politically for the government, and also, for the economy. Because if you think about it that way, like if people start staying back in, we're kind of going to go back to the COVID economy, because if you're not going to drive, you're not going to go out to eat, right? So we're going to kind of like
Do you
regress to a certain
do you
extent.
think do you think there's enough economic pressure from the small people feeling this to put pressure on the government to force a solution? Will the US and Europe feel forced to do this at some certain point in time? This continues. It feels like so.
I mean, the US already is, right? The US is already like
Yeah.
they're talking to like Iran and Venezuela to get them to pump more
Yeah.
oil. Like when you start talking to Iran and
Yeah,
Venezuela
yeah.
and say like, "Hey guys, pump more oil," that's when you're like kind of
The
in the
the
deep
the Saudis already agreed to it, right?
when you're in the
So,
deep end of things, right? But I mean, the problem with all
yeah.
that is like from the reports that I read, all those sources of energy won't come online until like 6 months down the line, right? Even
Yeah.
like the US, like if they restarted fracking in the US today, it's not going to hit the markets until like 6 months later. So like we're looking at least like a lead
Yeah.
time of like 8 to 12 months out. So
Yeah.
I mean, uh, but then this is a real problem because before we were getting this situation where we had high inflation rates because of liquidity, and then some of the input costs were
Mhm.
too high, right?
Yeah.
But if we drive input costs even higher because of the energy prices going up, we're going to start going into, or it's likely that we'll see what we saw in the 70s, which is stagflation, right?
Yeah.
Where basically companies just stop producing things
Right.
because the cost of materials is just too high. And they're like, oh, we can't make money on this, so we're just not going to produce. And then we're in real problems because then you need like a Paul Volcker to come in and raise interest rates like 20%
Correct.
to like basically
Correct.
to break this thing. And if you can you imagine like where a lot of the companies, a lot of these like tech companies would be if they were like if interest rates were 20%, they would just be dead. It would just be
Yeah.
a wholesale massacre. Like they would all die.
Well, if you think about the Fed and their current the US Fed and their current policy, it seems they just want to keep leaning into QE and pumping more money, or at least having a soft stance, which leans more into more stimulus if things get bad, which then leads to the scenario you're talking about, right? So it's like you said, someone might have to swallow the hard pill and do the opposite, right? But it doesn't seem that like that's happening anytime soon.
But this is exactly the problem with QE. Is like when they
Yeah.
like this QE started during the recession, during the 2008 recession, right? That's when they started doing all this like stimulus. And then
Yeah.
the criticism of QE has always been, if you keep doing this, what are you going to do when shit really hits the fan, right? And now we're
Yeah.
at the shit has really hit the fan level. Like you can't print any
Yeah.
more money. Interest rates are already at zero. What are you going to do? You don't have any more levers to pull. I mean,
Yeah.
I guess you could print more money, but I mean, in that case, and then
But that leads to hyperinflation,
exactly, right? So
you know?
you're kind of like in the between like a rock and a hard place, and this has always been it's always been the criticism of QE, and now it's kind of
I
like
mean, it's
the devil's what's that phrase? Like the crows that come home to roost, basically.
Yeah, yeah. I mean, my take ever since like 2008 was like I always had thought initially going through some short term of austerity, resetting systems and behaviors was good.
Yeah,
But everyone says, oh, no one, you don't need to feel the pain, just keep pumping money. And it seemed to work for a decade. Like that truth held for over a
yeah,
decade. So, but like I think you're absolutely right. Like we kind of just kicked the can down the road, and the real austerity will be coming with the right catalyst, and
yeah, and it's gonna be
that
really
that could be
painful.
potentially worse. Yeah,
Yeah, it's gonna be
you know.
really, really painful for a lot of people. Like even for us, it's gonna be painful. Like we were joking about it, but I'm looking at my stock portfolio. It's brutal. Actually,
Has it not been painful
no,
enough for
I,
you?
I'm serious. So it's just all
Today's
red,
very sad day
terrible.
episode.
It's just like I'm
Yeah,
like,
we're
nope, not
very
looking at it.
upset.
You
Yeah.
know,
Well,
it, in October last year, there are a few guys who asked me saying that, hey, I think the market has very high risk. We should all liquidate and hold cash. And last week, I
yeah.
talked to, I think, 4 of them who gave me that advice in October. And I said, how are you guys doing? And 3 of them are saying that, oh, I'm bleeding. I said, I thought you wanted to liquidate everything. And he said, I mean, all 3 of them said, yeah. So I knew that was the right thing to do. But at that time, I just felt, I mean, it's just a very difficult decision to do to basically liquidate everything and just hold cash. You probably need to go through a few cycles to be able to have that guts to do it.
Yeah,
True. But I mean, even if you're holding
yeah,
cash, your cash is worth 10% less now than it was like a few months ago. So
that's true.
It's much better in a stock portfolio for sure.
that's true. My stock portfolio is really ugly. That's fair.
Yeah. I think, if we want to have deeper insights, we can invite our friend Dimitri on for a special episode where we get more insights into the Russian perspective. Like what is the actual social contract with the people in the Politburo? How are Western ideals really embraced in there? What is the extent of soft power? What does nationalistic pride actually look like? So I think that could actually fill in parts of the other puzzle that we don't really understand as foreigners, and also from some faraway situation. And I hope it brings more nuance to it. But since we're not doing that, maybe we should just move to the next topic, I guess.
Yeah.
Yeah,
I'm fine.
I think having some perspective would be good in a special episode because whatever that's happening, although sort of, I mean, we live in Asia and the world's far away, but all the economic, geopolitical consequences, all the
We're feeling
impact,
it.
and lots of things we do. Yeah,
Yeah, for
good.
sure. For sure. All right. And part of this narrative does cross over into what we're seeing with DiDi, right? The ride hailing company from China. March 11th, last week, shares tumbled 44% on one day. And that's
Very big.
crazy if you think about your just stock. Yeah, it's like almost halving in a day. It's some wild stuff. Basically, what happened is DiDi went ahead with a U.S. listing. The CAC, the Cyber Administration of China, was not happy with this. So they pulled, the app from the Chinese App Store. So they had planned to actually delist from US, and they were supposed to list very recently to the Hong Kong Stock Exchange, but they did not pass scrutiny again. So their proposals and security measures and data leaks were not sufficient enough from the CAC's perspective. So they had to halt it, which caused this fall. Right. So on one hand, there is a real fundamental driver here. I think them getting hit so hard, not being in the app store and being losing listings and stuff, but it's coming from regulatory scrutiny, right? So it's a very interesting story, and tied with that is the KWEB. Jack, why don't you explain that for our foreign listeners who actually don't know what the KWEB is, or is it KWEB, or how do you say it?
I think the foreign investors would know KWEB better than I do because I usually, when I invest in Chinese tech stocks, I invest in individual stocks, but KWEB is ETF of Chinese high growth tech stocks, and it
Yeah.
has been going down tremendously. But across the board, you see all the tech stocks in China going down, and that has been
Yeah.
happening since pretty much February last year. So I think February the 19th was the highest point. They started going down, and wave after wave. So every time people think that it's the bottom, something else hits, right? I mean, the regulations, the crackdown,
Yeah.
the data security concerns, but basically, the SEC is the sort of a threat of a potentially listing Chinese tech stocks, Chinese stocks, yeah. So basically, one thing after another. Yesterday the lockdown in Shenzhen, so and the potential lockdown in Shanghai.
Yeah.
So it seems that it's kind of wave after wave. I mean, people's confidence has been really hammered.
Yeah.
And if you look at Alibaba,
Well, I mean,
now it's almost the IPO price in 2014. So
IPO,
which means that if you
exactly.
held Alibaba for 7.5 years, you have made close to zero return.
Well, that's that leaves the question, right? So I mean, we talked about this in previous episodes where this is just a continuation. On one hand, it's a continuation of Chinese crackdowns, and we talked about the implications, from an entrepreneurship ecosystem perspective to the actual valuations of these companies or people investing, right? On DiDi, on the other, of course, there's real actual fundamental problems with the company because of this situation. They revealed a $4.7 billion loss in revenue, in the last quarter, which is like a lot to lose. So I mean, that's why they probably dropped more than other people. So I guess, what do you guys think? Is this just a broad macro trend, or there's actual substance for these guys who are pricing in really very far long-term uncertainty of surrounding regulation and the CAC in China, And what does that really mean from this point on then?
I think so. You know the story behind the KWEB, right? It was caused by 5 stocks, essentially.
Yeah.
Yeah. So the story. Okay. So the story is basically the SEC is basically they're enforcing this new measure where essentially they're requiring that they have the ability to review audited financials of these Chinese companies, which is actually impossible, as I understand, because as I understand it in Chinese law, they won't let foreign any foreign bodies, regulatory bodies, like
Yeah.
review these
Yeah.
companies' books. But I think what's really interesting is, do you know what the 5 companies are?
Obscure companies which nobody knows.
No, not true.
Oh,
So 3 of them are biotech companies.
Okay.
One of
oh,
them
interesting.
is a semiconductor parts or machine manufacturing company. And then the 5th one, you guys definitely know, it's Yum China.
Oh, Yum. Oh, Yum.
Yum,
KFC.
yeah. So
Oh,
Yum, for those people who don't know, Yum China is the company that operates like all the fast food restaurants in China, like
of course.
KFC, Pizza Hut. They don't operate McDonald's, but basically all
Yum
the
brands.
yeah,
Under Yum
Is-
brands. Yum brand.
Isn't that like
right?
partially owned by Alibaba or Jack Ma or something?
That I don't remember, but I think
So
it's
then,
really indicative that these were
Mm.
the 5 companies that they chose to
Yeah.
roll, because theoretically this new standard, every single company on the KWEB is subject to it, I believe. So there's like a list of 200 some companies, and there's a lot of them that are not going to be in compliance or not going to be able to comply with this. But the fact that they chose these
Yeah.
5, I think says something, right? So 3 or 4 of them are like core strategic industries, or 4 of them belong to the core strategic industries that, China has, very clearly stated that they want to focus on in the next 20, 30 years. And the other one is Yum Brands, which is kind of like a symbol of like American culture and power in China. No, I'm serious. It's
Yeah.
not a joke, right?
It's true.
So I
Yeah.
think the way I look at this is it's like a story of it's an indication of decoupling, right? So
Mm.
for like many, 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 many years, right, the Chinese have kind of gotten the best of the both worlds, right? And the Chinese come,
Yeah.
they get access to American liquidity, American capital markets. They can raise from here. They can take American IP, right? And then on the flip side, they're like, oh, you don't you can't own foreigners. You can't own our strategic assets here. There's certain industries that you can't own. If you want to operate here, we're going to have to do an IP transfer where you have to give us all of your know-how, right? So it's been like very unfair, or maybe fair is not the right way to look at it, but like it's been a very unbalanced relationship for many, many years. And I think with a lot of the recent geopolitical tensions, with the supply chain, all these talks of decoupling, I think this is like I'm interpreting this as like a signal that the SEC is saying like, okay, fine, like let's decouple, let's do this. Like if you guys want to play this game where you get all the benefits and we get none of the benefits, frankly speaking, then we're going to start cutting you off of American capital markets, and you have to find your liquidity somewhere else.
so I just did some search. So basically, Yum Brands, Yum China, received 460 million investment from affiliate of Alibaba Group, as well
Yeah.
as a private equity firm, Primavera Capital. The reason why I remember this episode, it was because there was a joke circling around that time saying that Jack Ma was having a meeting with his staff. He got really hungry, and he told his secretary, "Go and buy KFC." And KFC came back saying that, "Okay, here it is, 460 million. Please sign."
Yeah.
Yeah,
That's a good joke.
it's a good joke. It is a good joke.
But but I
Yeah, go
think
ahead, Jaren.
the sentiment now is very, very bad. I mean, I mean the witch has groups. I mean, some of them with the pioneers, basically large ticket bankers from China, and everyone is under tremendous stress because nobody knows how this will end or when this will end. So there's quite a bit of anxiety going on. So I think it's still too early to say whether that would accelerate an exodus because even before that, I mean, people are complaining that it becomes increasingly difficult for US dollar funds to invest in China because basically you can't exit, and even if you do exit, I mean the valuation is shitty. So
Yeah.
so many of them are looking at investing in companies outside China, but they realize that the companies in emerging markets are even more expensive compared to companies in China.
So, Dave, can you also clarify or expand upon like you're thinking that this is maybe signaling for decoupling, but we've discussed before where China cannot completely also decouple from globalization. So how does that actually look like, right? So do they try to form their own blocks with the countries they fully invested in, and try to force those to decouple with them? Because China cannot fully deglobalize. They're not ready at the point, right, for this. That's just why they can afford war or this other thing. So what does that look like to you, or how do you think that actually plays out if they did want to start decoupling it? Is it even feasible?
Well, just to clarify, the delisting of these 5 companies was initiated by the US SEC, not the Chinese.
Okay.
Yeah.
Oh, okay. Okay.
So I just to be very clear, like I don't think this is like American driven primarily,
Okay.
right?
Okay.
DiDi is a different story. DiDi is obviously that was a Chinese
That's
driven
Chinese. Yeah.
instance,
Okay.
but these 5 companies is American driven. So I think this is like I said, I think this is a
Oh, I see what
move
you mean.
by the US authorities saying that okay, like
Oh, okay.
I don't think we want to play this game anymore where we get very little benefit and you get a lot of benefit, right? I think that's what they're saying. So just to
Well,
clarify there.
that's yeah. I mean, like it's almost like America made a deal. I gotta pick up my words, I guess. America made a deal that they didn't understand. You know, like
Yep.
because they did get benefit. They got very cheap goods that everyone's been happy with for the past few decades, right? Like they got it to consume. That's what everyone wants to consume. We got, all that benefit. That's essentially a transfer of wealth, right? And that's what that was the deal. But I guess they didn't realize the implications that it meant chipping away your power over time, right?
Yeah. Well, I mean, the analogy is like we traded away the farm for like, I don't know, like a couple of eggs, essentially. Yeah. Like we all got like cheap flat screen TVs for
Louis in a purchase,
yeah, like we all got cheap TVs
Alaska.
for a couple of years. Yeah. But then like the trade-off is like we gave away all of our core IP, right?
Yeah,
And then we
correct.
hollowed out the
Yeah,
American
yeah,
middle class. So that's not a good
yeah,
trade,
correct.
right?
Yeah. I mean, they're realizing it now, but like, I mean, that means, yeah, I mean, if that's the policy and stance, it means America has to really change policy and attitude where they have to start building things purposely. Just can't be on this consumptive, endless consumptive pattern. You actually have to rebuild manufacturing with real high technology now because labor is too expensive
Yeah.
and all these kind of things. But is America in a position to do that? You think?
I mean, okay, let's be honest. I like full decoupling is a pipe dream, right? It's never gonna happen. I
Yeah,
think our
correct.
supply I mean, we're just
Yeah,
if I'm being upfront here, like I think it's like but at the same point, like I can only speak to what I know, and what I know is tech, right? If you think about
yeah,
it, the tech ecosystem has been decoupled for the last 30, not 30 years, 20 years, whenever the Great Firewall
yeah,
was first rolled out, right? It was just never really
yeah,
formalized, or it wasn't necessarily not formalized. We should know more carefully. Like most Americans just didn't know and or didn't care, right? And I think
yeah.
that is what's changed substantially in the last 2 to 3 years, especially with COVID, is like a lot of Americans care now. Like if you look at bipartisanship in the US, it's like at an all-time high. It's basically they can't agree
Mm,
on anything, but if there is one thing that everyone can agree on, and that's foreign policy towards China. And everyone
yeah,
wants
that's
like
true.
a harsher
That's true.
foreign policy towards China. Whereas like 4 years ago, honestly, like you can say that a lot of things about Donald Trump, but he fundamentally changed the conversation around China,
Yeah, he
right?
did.
And once he
He
started
did.
having and once we started having that conversation, we can't put that genie back in the bottle again. It's too late.
Yeah. Well, that's what Obama did very expertly. He kept it in the bottle very
Yeah,
well,
Obama
right?
did a great
So
job. Obama was like, "Oh, don't look here, look here," right? But then like, Trump was
yeah,
like, "No, it's
correct.
I mean,
stupid, and it's a bad deal." And so yeah,
don't you think this is inevitable because I mean, in order
Yeah, for
there
sure.
can't be two poles. It just doesn't work.
Yeah,
So if China exists in a global trading order, challenge US situation, sooner or later this will come about. And whether Trump
well,
did right thing or not, I
yeah,
mean, sooner or later this will happen because I mean, historically, you never had like, I mean, two big countries sort of coexist very peacefully. And I mean, you have situations where the three, five
yeah.
powers, but two, I mean,
yeah.
it's very difficult.
Well, that leads to the point where it's very hard for these two different systems at odds with each other.
Mm.
And what happens is like if China wants to exist in these two worlds, they have to either accidentally liberalize a lot of things, which has probably been happening, and they realize that leads to a loss of power. But them cracking down doesn't engender themselves to continuing a harmonious, continuation of the two system policy, right? Like essentially, like if they had just let DiDi list, it's kind of like a good win. You have a Chinese national hero that's very global, but at the same time they lose control in that, right? So they're stuck between these two things of so essentially you end up clashing no matter what, like you said, right? So
I think
it's hard for like, you end up, these two things just can't, last together. It almost feels like it's gonna have to get physical at some point.
I I think, I mean, this is my thought. It's not valid anywhere, but I do think that if you look at a lot of the things that she did to essentially makes the country a little bit more dictatorial and reverse many of the liberal policies installed by his predecessors. I do think that they took lots of inspiration about what happened in Russia. I mean, after the Soviet Union
Sure.
broke up, I think the Russian leaders at that time, Boris Yeltsin, etc., they wanted to be in the Western order. They wanted
Yeah.
to become liberal, but things went out of
Yep.
control. So, and I do think that the West didn't help Russia or Ukraine adequately back then. So I
That's
think
fair.
because I think last 3 years, I noticed in the news that a few sort of party sort of ideology meetings, and I think she mentioned a few times that we need to learn from the experience of the failure of the Soviet Union. So I do think that I mean, whether it's justified or not, that probably strengthened the leadership in China's deep suspicion about, I mean, liberalizing the society.
Well, it seems to be going in a complete opposite direction. So
Mm.
I don't know. Um, any final comments on this topic, guys? Like, I don't. What so D? What happens to DD? I guess. Can they recover from this? Do they finally list? Uh, can they realize their valuation? Because actually, I think at the current valuation of the current listing, it's at 50 billion, if I'm not mistaken.
Still?
48
I
billion.
think it is about 10 billion now. If I'm,
Yeah.
10 billion
Like,
now.
it's
yeah.
about 10 billion. It's if
Maybe
you
I was
think
looking
about
at something
if you
else.
think about that, it's lower than Grab. It's lower than Delivery Hero. It's about it's
Oh
it's
yeah, it's
about
like
one.
8.5 billion.
It's
Yeah,
about 1/3 of GoTo. If GoTo managed to list at this
yeah,
valuation
yeah,
of
Yeah.
29 billion.
But come on. Okay, we'll get there. We'll get there. We'll get there. I don't want
yeah,
to.
yeah. Sorry, I was missing my notes. I was looking at the SEA C value.
Uh,
That's still around hovering on 48, 50
Yeah.
billion. Yeah, sorry, my brain's fried. Okay, let's I don't know. Do we have time for one more topic, I guess, right? Unless you really can grind it out.
No, let's
Or
just
should we
bucket
just
it
do the
all into one
go-to?
thing. We'll just bucket it all into one. I think.
Okay, fine. We're gonna bucket go-to. Yeah, actually, no, they're kind of in a similar vein. Go-to wants to IPO, grab results and see results all combined. So for GoTo Group, the new entity formed from Gojek and Tokopedia, they're set to raise 1.2 billion USD April 4th. They had a call today, John Genda, which I think you listened to, so you have some interesting insights there. On the back of that, we recently had the Grab and C results for their Q4. Grab reported a net loss of $1 billion. They're in a very tough position. Their stock is getting hammered, right? Their annual loss was $3.4 billion. For C Group, they also had a lot of headwinds. Their stock is getting hammered too. For C Group, annual total GAAP revenue was $10 billion, but their gross profit was only 3.9 billion. Their losses, if you dig into the notes, they lost about 2 billion. I think between GoTo, Grab, and C, they've all lost very close to each other in the 2 to 3 billion range of losses. Um, so very, very disappointing results reflected in stock prices across the board. Interesting enough, GoTo only wants to raise 1.4 billion with that burn rate. So I don't know what that means for them, which is also a very existential question for Grab because they have a very short runway if they keep burning at the same rate that they're doing too. So I don't know. What do you guys think? You want to talk about GoTo first, I guess? how painful that deck was to read.
Yeah, I want to say one thing before we get into a serious conversation. Like, that deck has to be by far the worst prepared presentation I've ever seen. Truly, like it is unbelievable how poorly structured from a storytelling point of view that deck was. There's no coherence. The fact that like it wasn't even readable in a lot of the times. There was like the currency wasn't consistent. There wasn't like any explanation of like half the acronyms that were used there. And it just I truly can't believe someone paid like a bank like millions of dollars or 2% of their IPO, whatever their fee was, to create that deck. It was like, John Gong, I'm like actually upset at you that I had to read that stupid thing because of you, because you wanted to talk about it. So I just want to say that, just putting that out there. It's crap.
I was
Do,
very
do, do, do,
I
do,
was
do-
very interested.
Sorry, go ahead.
No, I was just gonna say I was very pleased to learn that Tokopedia's revenue was bigger GDP than China and US combined.
Yeah.
So I was very
According
surprised
to
to
the
that.
deck.
They're
According
like
to- according to the
30
deck.
something, just like 38 trillion or something
I think that's in rupiah.
USD. So
No, it
supposed to
said
be in
no,
rupiah,
it was in
The
USD.
label
Is
is
it
We will, I'll
mint.
send,
Oh gosh.
The mint
I'll
in
pop up the
rupiah?
screenshot on the deck that
Yeah.
Oh,
that
gosh.
the Tokopedia revenue is like 38 trillion or something ridiculous number. Yeah, it was
Yeah, they
quoted
meant to
wrong
say
currency.
trillions of rupiah, but they labeled it as US dollars.
Oh wow.
So
Oh,
very
wow.
interesting deck.
So
Yeah, a lot of I don't know. But what was your take, Junghyun?
have you read the IPO prospectus? It's 967 pages.
Oh my god.
Pages. Wow.
The visual on the
God.
cover is amazing. It's amazing as usual. And but 960 pages. I mean, I managed to read about 5 pages because it's all in Bahasa, and they became a bit too much. That said, this morning, what's today's date? It's the 15th of March. This morning, so they had this due diligence and public expose meeting in Jakarta, which is broadcast live on YouTube. So I watched half of that. It's tremendously, hilariously entertaining. So it showcased like I think 5 or 6 different dances from. I don't think they're traditional dances. They're basically reinterpreted dances. Everyone's wearing green and it's all very lively. So yeah, I enjoyed the show, and there was a session of chanting Indonesian national anthem, which I think was fantastic. I turned off when they started talking about business numbers. So I'm not sure what exactly they talked about, but the show was very nice. I mean, it was truly
Wait, really?
enjoyable.
They had a variety show during their like investor presentation? What? I don't understand. Like, is this like
Yeah,
a thing in
it
Indonesia where
was,
is this
yeah,
common?
it's,
Like, joke
yeah,
aside, do they do this? Is this expected or what?
I think it's expected. I've been to a few Indonesian government so sessions that they always proceed with some
Interesting.
kind of performance.
Right.
It's the same as if you go to a
Oh, wow.
serious Indian government event, they will always light a lamp
Yeah.
at the beginning. So
Sure.
Oh, okay.
I think that I think that's actually cool. Kind of like it. But of course the when it comes to business, 28.9 billion valuation. That's like wow.
Ooh. I
Well,
mean,
yeah.
yeah. Just to elaborate on that just a little bit, right? So I actually did spend like an hour and a half reading Stack, and again, it
That
was like
big.
quite the most painful experience I've had in a long time. I feel like Russian novels are easier to read than that deck. So
In
I looked
Russian.
at so if you actually look into their valuation matrix and how they got to an implied or impugned valuation of whatever they were asking for, right? They basically what they did was they did the framework is sound,
Comparables.
right? Is they took
Yeah.
comparables of similar companies within the 3 different sectors that they operate in, so like e-commerce, mobility, and financial services, right? They did they did their GMV, a revenue multiple or a GMV multiple on the comparables, and then they came out with an implied valuation for each of the sectors, added the sectors together, and that's how they got that number. What they didn't really, you have to dig a little bit into the deck to find what they did. But when they did the comparables, they basically treated all comparables and they weighted them equally, right? So what that means is basically within like the fintech space, right? They had like comparables such as e-commerce enablers, like a Shopify, which gets like a 30x multiple versus like a payments processing company, which gets like maybe like a 2 to 3x multiple. And when they average them out, they weighted them all the same, so there's no adjustment for like market size or market cap or like sector. They just treated them all the same, and then they basically took a straight line average and use that to calculate what their appropriate comparable
Valuation.
multiple is, which I thought was just kind of like, if I asked like a high schooler to prepare a presentation, that is probably the framework that they would have used. What is more interesting though is I think they're gonna be really, really disappointed with their offering. I think they really missed the boat. They waited way too long to get this to market. Like with the current macro environment out there, they're gonna raise nowhere
very late.
near. So like Bukalapak is kind of like, I think, a good proxy for this, right? So Bukalapak IPO last year, it's about a year ago, actually, I think, right? And I think their GMVs are roughly similar. I think Bukalapak at the time was doing like maybe 30 billion in GMV, which I think is comparable to GoTo. Right now, Bukalapak, do you care to guess what their GMV to valuation or valuation to GMV multiple is?
Well, they
You
were
mean
marked to market over a year. It must be very
you
close to their actual GMV.
at the IPO or now? Because it's down for like
Now,
3 quarters.
at the current today, like yesterday,
No idea.
whatever day.
It's X.
Okay, just it's 0.08. They're trading at
below one.
0.08 to 0.08. So
Oh, 0.08.
0.08. So Bukalapak is currently worth, I think, like $4 billion or something like that, or $3 billion USD, and their GMV is like 25-30 billion.
Wow.
No, GMV can't be that high, right?
So
No, it can't be that high.
Yeah, let me Bukalapak. I can send you guys a link later, but that's what they said. Bukalapak's worth roughly like 2 to 3 billion, and then their GMV is around like 30 billion. So it's point like it's.
What's the discrepancy, do you think?
How can Bukalapak GMV be 30 billion? I mean,
Here, let me send you guys a link. It's
okay.
the Edge Markets, right? So it's
Oh, the
market
Edge.
value. Yeah, the Edge Market. So their market value as of January 18th is 2.6 billion US dollars, right? And then Bukalapak's 2021 GMV, let me find out. Bukalapak 2021.
Should not be too much from 3 or 4 billion.
I can't find it at this moment. But anyway, it doesn't actually change my fundamental point. Is I think like at this, I mean, fine. Let's not look at Bukalapak, right? Let's just look at Grab. Grab IPO at $40 billion, give or take. Right now they're sitting at 11, which is honestly, I think that's only like 2 or 3 billion more than the cash they have on hand at the bank. I think they have like $9 billion in the bank. And then
about 5 billion more because they still have 2 billion debt. Remember that?
Oh, right.
Oh, wow.
Right.
Yeah.
Right. Okay. Yeah. Exactly. Right. And then like same, like Shopee at its peak last year was like $250 billion, and now it's sitting at like 50. So I think like I mean it fine. Bukalapak, the numbers notwithstanding, like the actual details notwithstanding, I think these guys are going to really be in trouble. And I think, like I said, they've just totally missed their window on this one. It's just like we just talked about it, right? With the current environment, with interest rates, with inflation. I mean, all the growth stocks, all these non-profitable growth companies are like down 80% from their highs. I mean, there's like no way they're going to get 40 billion or 30 billion valuation. That's it's a pipe dream. It's never going to happen. I would bet money on that.
April. Yeah, they're supposed to list in April, right?
April 1st, right? Is that a joke? I can't tell.
Yeah.
April the 4th.
Oh, April 4th.
April 4th.
Okay.
April 4th. Yeah, it's the target date. Yeah.
I mean, who would be buying into the IPO? I mean,
it's
is
an
the government
IPO.
buying into this?
Yeah.
So I mean, maybe. Go ahead.
I spoke with a few institutions last night, and I mean, the results I got was pretty unanimous. No not going to fork any money for that. Not going to fork any money for that. But people suspect that that I think just like some of the SOEs in Indonesia have invested in Bukalapak before, I think there might be some Indonesia
Oh,
corporates,
yeah.
SOEs, retail investors who are going to buy into that. But regardless, like 1.25 billion in IDX, I don't know. Let's see what happens. I would think that it's really brave for them to look at this valuation target. And yeah, it's I don't know, just
Well, especially in light of everything we've been seeing with Grab and whatnot, right? And also the whole macro change. So,
Yeah.
um,
I
hey,
mean, I mean, in general, I
yeah, go
think
ahead.
this narrative is a joke. Oh, sorry. Like, okay. I mean, like to be a little bit more serious and bring this conversation more serious. Like, I think like I've been saying this for the last year. I feel like so. Sometimes I feel like I'm talking to myself, or I just keep that scene in Zoolander where it's like just one look and keeps doing the same thing over and over again. And I feel like this is like these three companies all kind of like roughly fit into the same bucket for me. Is like they're all trying to like create this narrative that they're a super app and their assets all sort of like have some sort of synergy together, and then that they're investing. That's always the key word that they always use, that they're investing in growth. Okay. So I think this is like a really interesting analogy, right? So let's look at like Amazon, which for years was like the poster child of a company that was investing
loss made.
in
Yeah.
loss making investing for future growth, and that actually panned out. Okay. So let's look into that. So out of curiosity, what do you guys think was Amazon's total losses in its first 17 quarters as a public company? Remember, this is during .com crash too. So this includes .com crash.
I mean, I know the answer because we talked about it earlier. So
Oh, do you know the
I'll let
answer?
Jian guess.
Yeah, what's your guess,
Yeah,
Giancarlo?
we talked about it. Yeah, what's your guess, Ganjang?
No idea. 25 million.
Million?
No, come on, it
Come
has to be more
on,
than
be
that.
serious. 25 million? Like, come on. No,
I don't
losses.
I
Like
don't have any
accumulated losses. So.
I don't have any benchmark, so I don't know.
Okay, fine.
Tell me.
So in its first 17 quarters as a public company, Amazon lost a total of $2.8 billion. In its history as a company, Amazon has lost $3.1 billion in its entirety, right? So these companies have lost in like 1 year what Amazon has lost like in its history of
How many quarters that
existence.
is? Yeah,
I mean,
yeah,
since it's been a company, since like
yeah,
1994 when they first started, right? Which is like
yeah.
that's just, and then also you have to think about there's also another finer delineation that we have to make here, right? So you have to think about the timing in these companies' life cycles during their IPO phase, right? So Amazon was founded in 1994 and he IPO'd in 1997. So that's actually that means the IPO at a roughly young, at a quite a young phase
Yeah.
in its life, right? So theoretically, and so during that time, right? So I'm gonna just read you a little excerpt here. So uh, during or drilling into the quarterly results report at the time of its IPO, Amazon grew its revenue from 4.2 million in Q3 1996 to 8.5 million in Q4 1996. Its net losses fell over the same period from 2.4 to 2.3 million, right? So what that's saying is even during the early phase of Amazon's life cycle, its revenue growth was accelerating while its net loss was decelerating. Whereas with a lot of these companies, you see the opposite dynamic. You see both revenue growth, they're not actually accelerating that fast, right? Like Grab only grew like 30% year on year or something, but their losses are accelerating, right? And these are companies that are much later in their life cycle than Amazon was at the time. This was like that quote that I read was like from 4 years into Amazon's life period. Like Grab at this point is like,
Yeah.
what is it? It's like a 10 years old or something like that,
10 years.
right? And then
Sub 10.
last year, like between 2020 and 2021, their losses grew by like over 100%, whereas like their revenue only grew by, I want to say it was like 50, like 20% or 30%, right? So these,
Yeah, close to 30.
yeah. So I mean, just and same can be applied for GoTo. I think Shopee, this is less applicable to because Shopee has like an actual business that generates cash. So it obfuscates this a little bit. But in general, right, I feel like, yeah, I just think these like I understand why the people that are so bullish on this company. At times, I don't really understand it because I just feel like they're kind of going to these blinders on. It just doesn't make sense to me how some of these just.
Oh.
I mean, now we're getting closer to like probably what I would say are realistic valuations, but like 7-8 months ago, it was just crazy. I just, it made no sense at all to me. So I think we're finally seeing a bit of a return to reality here for some of these people.
So Dimitri's Central Ventures and us, we have been doing some of these assessments about the evolution of investment in Southeast Asia, and at the end of last year in December, we did a study benchmarking Southeast Asia compared to Latin America. So one thing you realize, which is interesting, is that in Southeast Asia in 2016, 2017, you have these companies grow to be huge companies because there's large funding became available, and at that time,
Yeah.
you didn't see the same dynamics in Latin America. You didn't have, like $1 billion rounds, $500 million rounds.
Not yet.
So if you look at now, some of the companies from Latin America which when listed in US, Donko, DiLoco, etc., they are. They have never received that much investment, and in Southeast Asia, it's just late stage capital became available very early, and there were people, SoftBank, etc., which were willing to bet a very, very big money into the market, and I think that was also a time where tech in China was quite bullish about expansion. So many of the Alibabas and the JD and Tencent, they participated in some of these large investment rounds. So everything together created this bubble, and now the question is that how it is going to take shape. So I do think that these three companies, I'm not sure about GoTo. I think Grab and C, they are at good positions because Grab has lots of cash, has more cash than C, and
Did they?
net cash. Yeah,
Not at the rate they're going.
Relative to the burn we're talking about here, do they have a lot of cash relative to their burn?
Burn is something that you can control, right? So that depends on the gut of
Is it? It doesn't seem like
leadership.
it.
No, I think so. I think they
Well,
have.
okay. I think if they accept a more realistic valuation, then yes, and then you could survive longer and try to figure a way to come up with money. But if they do this hodgepodge of trying to acquire really, really big assets, like their Jaya Grocer, which looking at the numbers was huge. Like
But that
if they
doesn't make
spend a few
sense,
more
right?
deals
Because
like
itself
this,
it's profitable. You spend money into asset which is generating profit. Why not?
Yeah, but that's I don't know, Jianggan. I don't buy that argument actually.
that doesn't grow
That's
value
I mean,
over
if
time,
you're
though.
if okay, that's my contention with that argument is because then you're thinking as a capital allocator, right? And like to pay $1 billion, or sorry, ringgit, it was billion ringgit, I remember, for
1.8 ringgit. Yeah.
Yeah, for Jaya Grocer, whose profit, their after-tax profit was like 67 million ringgit. That doesn't make sense. Like, why would you? That's an obscene price, right?
It's almost like a YOLO course, the delivery vertical, right?
I mean, like if you want to make an argument, like if we could make an argument, they could make an argument, right? And we talked about this, that this is sort of like a test bed for for deliveries and et cetera, et cetera, et cetera. And then the analogy is always the Amazon acquisition of Whole Foods, right? But then at the
But it's
time I said
expensive
that
only.
analogy doesn't stand up because Amazon's acquisition of Whole Foods was free essentially, right? The way that the market treated that acquisition is that market cap of Amazon increased by more than the 14 billion that they spent to acquire Whole Foods. Whereas in this case, I think their market cap actually went down after they announced the Jaya Grocer acquisition, right? So that's one. Two, if they're doing this as like an MVP, why would they do it in Malaysia of all places? Why not do it in a market that actually matters to them, like Indonesia, right? And three, again, it's a capital. If they're thinking about this as capital allocators, like that argument that it's a profitable company, yes, it is. It is profitable, of course, but to spend 1.8 billion to acquire 67 million of profit doesn't. You get fired for that kind of thing if you work in a bank or something, right?
What's the top line of Jaya Grocer?
Sorry.
What's the top line of Jaya Grocer?
I need to check. Hold on, I gotta. Let me look into
if
the
top line is added to the group top line, and if the valuation multiple PS or PGMV per se, it makes sense. it's I would think it still makes sense for me
It doesn't disclose in this article.
because
Here, I need to find it for you. Let me. You guys talk. I'll see if I can find it.
Okay.
because at the end of the day, I mean, when it acquires the company is no longer valued as of an offline retailer, right? I mean, whatever numbers they have,
Right.
top line, bottom line, will be added to Grab's numbers, and I'm sure whichever metric you look at, I mean, the multiples would be better than if Jaguars stayed standalone. So I think the question is that, I mean, what can Grab do with 10, was that 10 billion or 8 billion, whatever amount of
Yeah.
cash they have at hand? So they can either invest in the organic growth of their business, they can invest in new business areas, or they can allocate the capital and make acquisitions. Looking at the situation now, I would think that acquisition for them makes lots of sense. N- The problem is
It,
that, I mean, how do you
yeah.
make smart acquisitions?
No, exactly. And well, they have a few verticals that they have to make acquisitions in, right? Which is the main pillars that they focus on, which is of course, delivery of groceries, ride share, and financial, right? But like,
Mm,
so they already made their big grocery delivery one. I don't know how that's going to work regionally for them, how
mm,
that's going to roll out, because they would have to make the same acquisitions over and over again for every country they're in. But then say the other verticals, are there even enough deals in the market, mature enough companies that would be very additive, like a giant grocer, right? Or say rideshare. Now, revenue has finally returned back to 2020 levels. But the question is, they had this big story on rideshare being a huge driver engine of growth, which I don't see how, unless,
uh,
you
I
just instantly get so many more drivers on the road by the next year and more people wanting to
I don't
have transportation problems, right? It's just going to be very incremental economic
I
growth.
I don't think red hair is never meant to be a driver for growth. And if you look, even if you look at their target for EBITDA margin, is pretty modest. And many of the investors I spoke to are actually casting doubts about whether they can hit this 12%, because I mean, it is a sensitive topic. In many countries, it's high, it's regulated, it's watched, and they can't raise the prices as they wish. So, but they have significant market share, which means that, I mean, this part is supposed to
Yeah.
generate
Yeah.
profit for them. So it will probably be
What
a smaller profit center for them as compared to the lending business as well as the gaming business of C. But I don't see any way this could be a growth engine.
Yeah, no, but I mean, just it's the way that we were reading the decks a few
Mm,
episodes ago. The way they
mm.
project and the forecast the revenue of rideshare, it seems like that's going to be a big contributor cash cow for them. But clearly, yeah, I agree. I think realistic, everyone knows, doesn't seem like that's going to be the case. You can see the numbers coming in every quarter now, right? So,
Mm.
but it's
I
I don't
think
know. It's they have very few bets to make, man. They have to make them very carefully. Like, how do you materialize 40 billion in value with that much cash in a few years? That's very scary. Your market has to be very mature. I mean, you're trying to justify a valuation of Uber in Southeast Asia, which is so economically very far behind. We're talking most countries are still middle income or even lower, right? So it's tough, man. It's tough.
I don't think
Oh,
they should. I mean, honestly, I wouldn't, if I were them, I wouldn't even worry about trying to justify the valuation at this point. I would just worry about like
yeah,
actually
exactly.
finding a business model that makes money so they are actually
Yeah,
viable as a business. Because I've seen this so many times, and we all have, right? We've all worked for
yeah,
rocket companies, right?
yeah.
We've all raised. I mean, obviously not to this scale. This is above and beyond, but we've
yeah. It
all
was
raised
way more. Yeah,
huge quantums of money, and we've spent it all in like 1 year, 1.5 years, 2 years. And then what always ends up happening is you always have to go through these rounds after rounds of painful cuts where you have to fire first 20%,
yeah,
then 20% more, then 30% of your workforce. And it's like a death by 1,000 cuts, right? And
yeah.
I think that's like there, honestly, if I were these guys, right, I would just really like really
I
get your
think that's
house
the
in order
positive.
and figure out like
Yeah, yeah, correct.
what to build something sustainable, because this is not sustainable at all.
So I think that is the silver lining, is that if they keep getting mark to market, they realize that they have to make, like, they have a big enough market share where there is an implicit valuation that makes sense, and that they just have to make that sustainable. If they could focus on that, then if they give a very good story and a good base where you're not going on these death raises anymore, and then as long as you can sustain in where you are currently, and it's for sure could be in the billions for sure, right? But it's just they have to prove that at this point. So I think there is a silver lining if they could find that bottom and build up and they'll build around that value. So,
I don't know,
but
man.
if
What
they
if
if
it be
they
like
are, I don't
it
know
could be like
if they're
Groupon?
if they're chasing the different game, yeah.
No,
Groupon, yeah,
what if
Groupon's
it
still only a billion. in
No, but
the
I mean,
total market
they
cap,
could
right?
be, they could be like Groupon. Groupon,
That's
had
true.
very similar, like, the same
Yeah.
narrative, fastest growing company, super, growth opportunity, blah blah blah. IPO'd at like, I think Groupon IPO like at 20 billion or something like that, and like I mean, and it never made any money, right? It never made money, and today it's worth less than $1 billion. It's worth like 800 million or something like that.
Yeah. I mean, a little bit different, I guess. They have different. Well, they went global. I don't know if like Groupon ever had a narrative of expanding beyond group buying e-commerce. I wasn't too sure about that, but yeah. I mean, you're right. There is some parallel, I guess.
Yeah, sorry, it's their Groupon is now worth $500 million, and at one point it was
Oh, that
worth.
wow, that dropped very
Well,
far.
what's the?
Before, like last year, I was checking, it was like 1 billion.
Are they making a
Sorry.
profit? Are they making a profit?
No, but saying they never made a profit,
No,
right?
They're
no,
still not
And
making a
yeah, so
profit.
you're right.
no.
They
Wow.
never
They
made a
had
profit.
quarters where I mean, yeah, they had quarters where they're profitable. I'm sure, but like overall, it's just losing money recently. That's why it keeps dropping in valuation
Yeah,
and
exactly.
market cap.
But but
Um,
I do think for all these businesses, right? You start with a simple narrative that okay, I'm going to build something, and because of the hardware I choose, because the product I choose, it's going to be fast growing. And if it's fueled by capital, fueled by simplicity of the product, the business model that they have chosen, that fast growth is possible. And the question is that once they reach a certain stage where it's just simple growth is not as fast as it's not going to be possible anymore, and they need to find
yeah,
ways to start making money, and the funders and
yeah,
teams and even the investors need to make that transition, and what we see is
yeah,
that many
correct.
companies fail to make that transition. They just don't know how to make money.
Yeah,
I think
that's
I
fair.
think
That's a
they're
good
at
point.
that point right now.
Yeah.
Yeah. They're at that point now, and I think a big difference where like in China, like you see this happening, but they actually transition very well. They find very big markets and where they start initially is not where they end up, where they making more money, right? So, but we haven't seen that yet in Southeast Asia, and it's very different economics, it's very different game, different countries, cultures, everything, right? So,
Did you
it's a very tough time, and I think they have to prove it.
did you guys see the news today that Credivo, Think Excel has dropped their spec listing plans?
Which
So they're
company?
returning money.
I mean, so I think they dropped the plan for a merger. I've spoken with a few friends who were sort of discussing with them about their pipe round, and I think that round took a
Yeah.
long time. It was never closed. So it's
Mm.
I think
Credivo,
Credivo,
right?
yeah,
Oh, Cordivo.
From
Okay.
Indonesia.
for Indonesia, Indian founders, I think pretty good product. I think it's just the economics. So basically they do buy now pay later in Indonesia, and they're
Yeah.
like the others, they've also invested in banks, etc. But I think the challenge is that it's you just don't see how this business model becomes viable over the long term. I mean, unless it gets acquired by others,
Yeah.
or it builds itself a comprehensive financial super app or digital ecosystem, whatever you call it. But that prospect is extremely difficult because you're fighting against the big guys. You're fighting against with the traditional banks, Indonesia, some of the private ones, even some of the government ones are not bad, frankly. And these guys have
Yeah.
acquired licenses in the Philippines, in Vietnam, and in Thailand. And in their pipe round fundraising, they told the whole world that okay, this is all my time. But we all know that. I mean, building that business in Vietnam and Thailand. I mean, Philippines, I can understand. Thailand, I mean, you go and fight against I don't know SCB and K Bank.
Well, those guys are really well entrenched.
Yeah.
Very hard. Guys, let's all say one positive thing about each company.
I can't.
Let's say something bullish. You have to dig deep. What's the Andrew angle here? Or the Andrew G angle?
If you hire
Um,
GoTo, please fire bankers and hire me. I will make you a much better deck, and I will raise you. I will add 10% to whatever market cap that you get because your deck will be that much better. Because the current one's the piece of dog shit. That's all I'm gonna say. Yeah.
Okay, coming in very positive, Dave.
I'm not gonna. I refuse. I'm not gonna
Well,
touch the ball.
the one positive thing about Grab is that the valuation is somewhat closer to reality, I'd say. So
so I think about Grab is the cash they have, is the new CEO they have hired.
Wait. Grab as a new CEO? What?
COO,
Oh,
the guy who used
COO.
to
Oh,
the guy who used to be CEO of HSBC Singapore many years ago, a guy called Alex Hungate. And so I know a couple of friends who used to work with him at HSBC, and they said this guy is brutal. Brutal in the sense that he knows how to execute, he knows how to fire people, he knows how to rationalize the finances. So of course, I mean,
yeah, good.
I think there are hope. I mean, there are hopes on him. And I do think the Grab shareholders know that there are things which need to be done, but they just see with the cash they have, with this executive leadership, and with the guy, sorry, let's not say bad things about anyone, but with potentially a new guy to run digital financial services, and and hopefully they can get something out of it. I'm still bullish about Shopee, and I know their lending business is churning out a lot
Growth.
of profit, a lot of profit, a lot of
The
profit.
growth. Yeah.
Hmm.
Yeah.
Growth was really big.
So and their investment in Shopee Express and all these capabilities, and I think it's on the right track, but they're racing against time. So they need to
Yeah.
build all these things and turn these things into the take rate they get from the merchants, so that
Yeah.
they can satisfy the capital market.
Well, out of the three, they had the most clear narrative and the most cohesive vision between all of their synergies, which is what they say, content, community, and commerce, right? Shopee being the commerce, content, or gaming and entertainment, which is that, they have some headwinds, they admit it. And then the last piece, of course, is, the community part, which was the retention piece for all these things once they have the synergies built, right? So I think, they have been making really good bets from C perspective. I think that it's, short term seems tough right now, but, I think they're
I
in a
think
good position to, if
I think it's also
go
good
ahead.
for them to be humbled a little bit.
Yeah.
Remember something we mentioned in the previous episode, and the way they were raising this the 6 billion, is that 6 billion? 6
Yeah.
billion round
Yeah.
in September last year.
Yeah.
They told the investors basically along the lines of the time so big, our
Oh, yeah.
competitors so weak, we know how to execute better than you do. Why don't you give us the cash? I think now they probably have been humbled, which I think is a good thing.
Well, they'll spin the narrative later when they recap. They're saying it was our insight, and we knew we needed this money and this for this purpose and this strategy. So, but
That's a
yeah,
good thing. They never tell people other than close cohort investors any narrative. You don't see them say anything, which is probably a good thing.
yeah.
Yeah.
Well, so Dave's going to be shorting all these stocks apparently.
Yeah.
Yeah.
Yeah. That's No, not Shopee.
I mean,
I think Shopee.
Not
Shopee or C, I think also I agree, John. Actually, I think C has like some actual
C has
fundamentals
potential.
there that are quite strong. But for the and GoTo, I don't even know how to do it because it's Indonesian. But Grab,
Yeah.
do you know a friend of mine who runs a equity research firm in Hong Kong called Blue Lotus? He published a coverage report for Grab 2 months ago, and he put a price target of $3. And as of
Yeah.
yesterday,
Wow. Well, he hit the nail on the head, man.
and I was asking, hey, guy, hey, man, you got it right. He said, no, doesn't count because market sentiment is bad. I want the market to genuinely show that the value is.
Yeah, he wanted to be a bull market, but it's a tank. Wow, that's a tough one.
Yeah. That's true.
That's true. That's true.
Yeah.
Well,
Anyway.
yeah. So hopefully, so I think we can close out here, right? I think we've probably covered enough.
Yeah.
I don't know. Anything on a personal note? Everyone okay otherwise personally?
No, I'm obviously
good.
very aggravated by all these topics today, so I want to just bow out. I'm done. I don't want to be more
Yeah,
aggressive than I already have been.
Dang.
We miss Andrew's positive moves.
Yeah,
Yeah,
get
we
Andrew
need- we
back
need-
here.
Yeah, Andrew. Well, he's coming back to Malaysia apparently. So, but we'll see if it happens.
He's getting deported from Mexico.
Apparently,
Yeah,
he's
I
gonna go
guess
to
so.
London.
I guess so.
London's
yeah.
gonna deport him, and he'll end up back in Malaysia somehow.
Yeah.
Send him to Ukraine.
Yeah, well, maybe we can all organize a trip to Singapore then. So,
Yeah, you should. Why not? I mean, the borders are open, and today my team had been advocating to me saying that, hey, Singapore party is open. How about we all go to Bali and work there for a few weeks, and they're going to pay for their own flights and stuff.
wow, are you gonna do it, boss?
Yeah, gonna do it?
Maybe. I'm really tempted to get out for a while.
I'll come
Yeah.
join you if you go to Bali. Let me know.
Yeah, I don't
Yeah,
blame
yeah.
you.
Cool. I need to run. I have a call with someone in Brazil.
Okay. Bye, guys.
Alright.
Good talking
Bye,
to you.
guys.
Yeah.
Ciao, ciao.
Sleep well.